In this video, I'm going to explain how important it is to look through the Tier 1, Tier 2 and Tier 3 charts. Art's been trading for a very long time. It takes a long time to understand how the markets actually work. When you initially start trading and investing, you're told to look at the news. The news will tell you what's going on. Because corporations don't report every single day, it's viewed as the news is the next best thing. The news is there for our protection, and there's so very much of it to read each and every day. By studying the news, we're going to gain an edge. Except what we realize is the news is not our friend. The news has so many conflicting stories, and this is because financial markets are really complex. The global economy is completely interdependent. What impacts one country will impact another. Individual markets impact each other as well. Financial markets are so incredibly complex. All of these moving parts makes it so difficult to understand what's going on at a day-to-day basis. There is a way to get less confused. And congratulations to Maria. Maria said, "I've grown my account well over 100%. Fantastic, my friend." I'd like to thank you for joining me and watching this video, and to all the people who comment, that's just awesome. Sharing your insights and experiences is just fantastic. I'm going to show you some fantastic ways that you can profit from market volatility. I'm going to show you how you can go independent from the news. More importantly, I'm going to show you how to get ahead of the news. Let's run the numbers. Maria was speaking about the fact that she's doubled her account just recently. Well done, my friend. The annualized return on investment are the key things to look at, not the absolute ROI, and not the gross absolute return or even the profit and loss. You want to focus on these percentages and try to make them as large as you can. There is not a fixed percentage that you apply. You just have to look at how the market is moving. For example, a 4% return on investment just turned over within about 9 hours can create an incredible return if it's annualized. That means you just keep on doing it. And inside the crypto space, you can do that. But don't place yourself under too much pressure. Just to give you an idea, here are 2 trades done on Doge that delivered that annualized return on investment. And you can see this has just been done. This is current. Here's another couple of trades on Litecoin. You can see that these little red arrows, they're sell arrows. And buying on red is a very powerful thing to do. Sometimes you can't turn the levels over. Don't worry about that. You control the trade or investment, but the market controls the return. Here's another couple of trades on Bitcoin Cash just very recently. The concept is buying on red gets you onto the right side of the percentage, and you can turn those particular trades over quite well, but sometimes you need to accumulate. What you're looking for in trading and investing is an annualized return on investment. Trading and investing is not a job, it's a business. Just zooming in a little bit on Bitcoin Cash, you can see the accumulations and the continuous rolling over of trades. Green means buy, red means sell. Here are some more trades on BNB. You notice I was accumulating here, and I told our beloved global family I thought it was time to do so. I've basically scaled out. I'm waiting for a deeper retracement or the structure to change. Recently, I said that I'd backed off and was seeking to accumulate at lower levels. Fortunately, XRP accommodated that recently. Just like a business, you can think on Friday and Saturday nights, you're probably going to get a lot of business, but maybe Monday, Tuesday, Wednesday, not so much. Here are just a sample of a few trades on Solana. You can see, again, the green is accumulation, the red is turning over. What I'm always looking to do is to get a high annualized ROI, and the ROI target depends on what the market does. It is not a fixed target. A lot of people like to scale out and look at heavier timeframes. When we look on the weekly, we can see Doge has had a number of crossovers. This is really good. It's getting away from resistance. But don't forget, going up doesn't mean it can't come down because it's moving in a wave. If it comes up, of course, at some stage it's going to come down. That doesn't mean anything. That's just normal price behavior. We can see that Doge is largely positive on the higher time frame, the weekly time frame. When we go to a daily time frame, what do we see? We see a lot of chaotic action inside Doge, but we see as well a lot of resistance being overcome. This wave is very overextended at the current time. When waves get overextended, they correct. It's normal. It's not any reason to panic or be concerned about. It's a reason to scale in if you've done your homework. Our methodology is very simple. We buy on red when the price is going down, and we sell on green when the price is going up. It's that simple, and we're focused on those annualized return on investments. When we look at different levels going down to lower time frames, for example the 4 hour, we can see it's in a really good trend. What about the 2 hour? Yeah, it's in a good trend as well. What about the 1 hour? Not looking too bad. But we can see something emerging here. What is that? What about the 30-minute? Oh, that's a bit more pronounced. What about the 15-minute? Now we're starting to see the level of granularity required to do timing. Please let me know if you're trading Doge at the moment. And where do you think Doge might be going? You don't need to be trading Doge to answer that one. What we've done is to just work through all the time frames to understand what could be cooking underneath the hood of Doge. But this is not enough. You could throw 100 different indicators on this, but we need to know the structural support and structural resistance levels. The CTKS method is the world's most powerful smart money buy and sell level detection system. It reveals structural levels. Let's pop on the indicator from the service and see what it's telling us. And this is telling us a huge amount of data. There is not just one structural level of support and one structural level of resistance. That's a newbie trick that people play. I'm just going to zoom in here for you. It's the interplay between structural support levels and structural resistance levels that tells us so much. You can see that Doge came into very strong structural support, and what did it do? It rebounded because we expect that. When you do market timing, you'll always be shifting your money between different projects. Sometimes it will be in Doge, you'll have a concentration there, sometimes ADA, sometimes XRP, sometimes Bitcoin, sometimes Ethereum, sometimes all of them. But that's completely up to you. This heavy structural support is a good thing for Doge. It's making sure that Doge is staying above, not collapsing below. Even though Doge is consolidating, it's coming down into structural support. This is an incredibly important concept to understand. We saw that Doge rallied through these specific areas, but couldn't get over structural resistance at this 10,537 level. That is a problem. This area has caused Doge to come back to structural support. And it's always on. This is the way the markets move. You'll notice that these particular levels, these horizontal levels, have all different kinds of weights. They're called SLs or Stanfield levels. When you get more heavier lines all congregating together, that increases the probability of a safety net bounce up in price. We see this all the time. If they're above price, it increases the probability of a push down in price as well. There's an entire standard certification process that covers level 1 standard certification and level 2 standard certification. You require both level 1 and level 2 to draw those horizontal SLs out. The beautiful thing, the CTKS method can be applied to any price chart. You learn it once and you can apply it for a lifetime. Here's just some of the components of level 1 standard certification. Level 1 gives you the foundation, but level 2 builds the entire structure. And you can see there's a lot in level 2 standard certification to learn. It's not an easy job to mark up these lines, but it's so incredibly powerful. Therefore, when you look at these lines, you can see that there's a lot of effort that's been put into creating these. Like most people just generally just say, oh, there's a resistance line here, I'll just draw a line there. What we're doing with Doge, with the CTKS method, level 1 and level 2 standard certification, we cover off every single time period that's covered by Doge's chart. Now you might not have the time to do that, that's why the service exists. So you can just add the indicator into TradingView and you can see exactly where smart money is buying and selling. It's an invaluable tool, and it's one I use every single day to do my trading. Going back to the trades inside Doge, you can see just recently I started to layer back into Doge because I saw such strong structural support. I said, I gotta get me some of that. And those trades turned over within 9 hours. They bounced down to structural support and they sold up at a targeted rate of return that I set in accordance with market expectations. You can see for some time I wasn't that interested in Doge. I wanted things to normalize. But how did I know that? Why did I step back? The Tier 1 are vitally important charts to understand. They're the engine of financial markets globally. And if you pop across to ctksmethod.org, you can pick up the TradingView indicator for the Tier 1, the Tier 2 and the Tier 3 charts. That will show you the structural support and resistance levels. Trading psychology and investing psychology is vitally important when it comes to the 4 stages that all investors and traders progress through to become consistently profitable. What happens? People start inside Zone 1 and Zone 2. These are the low knowledge zones. And of course, when people are just starting, of course they're going to have low knowledge. They're going to rely on other people. Eventually, you learn to rely only on yourself and to rely on systems such as the market timing cheat sheet to understand structure, and also to understand that you need to abandon certainty and you need to move towards probability and rules. And then when you start to make money, you need to keep it. As people progress out of Zone 1 and Zone 2, which is the very low energy zones where people lose money, they cannot be consistently profitable because they have the wrong system. Self-reliance is really important. This is what this channel is about. It's about you becoming more of a financial blessing to yourself and those you love. You do that by learning. In order to learn, we must be kind to ourselves, because if we're ruthless to ourselves, if we're in conflict with ourselves, if we have inner turmoil with ourselves, we cannot learn. If we can't learn, we can't do it better the next time. The key in life is to start small and scale. If you're going to the gym, you're just a newbie to the gym, and you want to lift weights, just pick the lightest one. And you might say, oh, I don't want to pick the lightest one, I'll be made fun of. Well, who cares what other people think? Don't break your body based on a stranger's perception of you. Many people start with a stylized image of what they want to become, just ignoring the fact that that's a journey. If you want to become consistently profitable, if you want to get a knockout physique, you have to start where you are. You can't start at the end. Your body may only allow you to lift the very lightest weight, and you may see others in the gym just buffed up. You literally need to start small and scale up. As you go stronger, you'll get better. Just like if you want to work on your physique, it's going to take time. If you want to become consistently profitable, you will not start there, because your mind is your worst enemy. After you conquer your mind, after you master that emotional control, the next thing is to get the right system. But your mind is the thing that's going to mess you up the most. Starting small and scaling is the secret of the universe in everything that you do. Everything will take time. Just be kind on yourself, to yourself and to others on the way through. I believe we need to focus a little bit more on Zone 1 and Zone 2 and how to get out of there. Those zones are particularly problematic. Zone 1 and Zone 2 are external facing zones. Zone 3 and Zone 4, you face yourself. If you're putting the reason for your success or your failure outside yourself, that's the wrong place to put it. You are responsible for your success and you're responsible for your failure. This guy became that big lifting weights because he put in the work. This is not a question of luck, it's a question of application, dedication, and commitment. If you're ready to buff up in the trading and investing space, you need to start small and scale. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.